It was one of the worst days we've seen in the stock market since September, guys. We had the S&P down 0.8%, the Dow down 0.7%, the Nasdaq and the Russell down about 1.5%. So we got to break it down, go over my thoughts on the markets. Am I buying the dip? I want to talk about some stocks I'm looking at. We're going to go over 5-6 earnings reports in this video as well. So if you guys find value, hit the like button, subscribe, check out my Patreon down below if you want all my moves in the markets plus more, and if you want 50 free bucks from M1 Finance, that's also linked down below. And with that being said, let's get the party started. So at this point in time, when it comes to SPY, which tracks the S&P, and QQQ, which tracks the Nasdaq 100, both of these are trading under, and they closed under the 50 moving average on the 4-hour chart. That's not a good sign to me, guys. That is a sign that there could be more downside in the short term. And I'm not for sure saying there's going to be downside in the short term. I'm just giving it to you guys how I'm seeing it. The fact that we close under here, under the green moving average, is not a good sign. That means SPY could end up going down maybe to 450, 455 on the lower end, which means, hey, we could have another 2, 3, 4% more downside when it comes to SPY here. And QQQ actually closed way under the 50 moving average compared to SPY. I mean, this had a worse day compared to SPY, so it makes sense. You guys can see we failed holding at about 393. Now we're trading under 390, and it looks like we're trying to fill the gap when it comes to triple Q here, down to about 375, maybe 380, right around the 180 SMA here on the 4-hour chart. And the truth is, guys, this is not a big deal. You might be seeing, oh my gosh, the markets are red. You probably saw that across a lot of YouTube channels. Oh, the markets are crashing. The VIX was up 5%. Inflation is ripping through the markets, which is true, but that doesn't necessarily mean that we're going to crash through the floor now. That's just not how it works. I mean, overall, we are still up. If you look at the markets, guys, from the middle of October, just about a month ago, a little bit less than a month ago, actually, we're still up a lot. A month ago, QQQ was trading at 366. Now we're at 390. We're still up about 6% over the past month, despite the sell-off we saw today, and that's on triple Q. But when it comes to SPY, we're probably up even more. Let me see here. Middle of October, we were at 442 roughly. Now we're at 464. Well, we're not up more than QQQ, but still, we're up about 5% still, despite this sell-off. So don't freak out. Don't go sell everything. Well, I can't tell you what to do. I mean, I'm not a financial advisor, but don't panic. I mean, this is just normal market action. And if you guys want to see my update video from this morning about going over the CPI numbers and so forth, which, yeah, I mean, we have inflation. And we've been saying this on this YouTube channel. I mean, I've been saying I don't think inflation is transitory. I said that months ago. And, the data proves that at this point. And trust me, if you want to hedge against inflation, you don't want to be heavy in the U.S. dollar. Let's just put it that way. I mean, gold went up today, silver went up today. Even though stocks went down today, owning real businesses via the stock market is a great way to hedge against this inflation, which at this point it's about 6% annualized. We're at a 30-year high for inflation, if I remember that correctly. So yeah, I mean, I wouldn't panic out of the markets, guys. No way. I actually bought a little bit of VOT today, which is a mid-cap growth ETF. So I'm still buying in, I'm averaging in, and I'm just continuing normal market activity. With that being said, though, I do have a little bit of cash in my accounts, but I'm not heavy cash, like 80% cash, waiting for the crash. I'm just not doing that right now. And I'd love to know what your thoughts are down below in the comments. Make sure to hit the like button if you are finding value in this video. Let's try and get, come on guys, let's try and get at least 200 likes. I really appreciate all of you guys out there and you hitting the like button and actually commenting and subscribing, all that stuff, which is free, by the way. It helps me out in the YouTube algorithm, and I do appreciate all of you out there that tune in every day. You guys are awesome. So now that we went over the markets a bit, we talked a little bit about inflation position, kind of how I'm not panicking at this point in time. There's really no need to, in my personal opinion. Maybe some of you guys are. I don't know. Let me know in the comments. But now that we went over that, let's go over some stocks, many of which reported earnings today, and a lot of them are moving up after hours. SoFi is number one, ticker symbol SOFI. This went down about 8% at the close, right? Down about $1.70, $1.80, nothing too crazy. And it saw a very quick V-shaped recovery after hours. It closed at $20.40. Now it's trading near $23. So we sold off during the market, throughout the day, and then boom, earnings came out. This thing V-shaped recovered, and it's ripping now after hours. It almost took the highs out from a couple of days ago, about a week ago, at about $23.50. Now we're trading, like I said, a little bit under $23. So let's look at what they ended up reporting. Let's see down here. Okay, they did EPS of -5 cents, which beat the -14 cent estimate, which is nice. And they did sales of $277.19 million versus the $255.63 million. So double beat there on SoFi. They're very close to profitability at this point, guys. They only lost about 5 cents per share, which is solid. And they see full year 21 sales at $1 billion to $1.01 billion versus the $979 million estimate. So that's a nice beat when it comes to full year 21 sales guidance, which is always great. And they added 377,000 new members during Q3, which I'm assuming that's a lot better than what they did last year. And you can see it here. SoFi stock shoots higher after earnings are very strong on nearly, if I could talk today, guys, every metric. So yeah, I mean they ran up 14% after hours. Are they still up 14? Probably a little bit less than that, but still, they recovered all that gain from today. The loss from today, rather. They recovered all of it and some. Now we're actually moving up in the after hours, like I said 100 times in this part of the video, guys. So overall, it looks like we saw the dip down on the 180 SMA on the 4-hour chart. We held it at a higher low. Buyer stepped in. Now they're pushing it higher. So the way I'm looking at this now, guys, no joke, if we end up taking the high out from last week, 23.50, which I'm going to set my alert right there, and it's not guaranteed we're going to do that. I mean, nothing is guaranteed in the markets, but listen to this. If we take that high out, we're probably going to see the next leg up here after the great earnings that they just reported, probably towards that high from, when was this? The beginning of June at about 25.50, and I'm not sure if that is the all-time high. No, it's not actually. If it breaks 25.50, then maybe we start going to the $28 all-time high from the beginning of this year back in February, but we're not there quite yet. We have to be patient and see how it goes. But overall, SoFi, crushing it, guys. If you own it, let me know in the comments. You're doing pretty well right now. Next stock, which I own, is Disney, DIS. Let's pop it up. This one's down about $8 in the after hours, so that is about 5% down. So let's see what they reported. I'm very curious, actually. Oh, Disney Plus, too. I almost forgot about Disney Plus. How could I forget? I mean, come on. Oh, they missed EPS 37 cents versus 44 cents estimated. And let's see here. Wow, look at that, guys. Sales. Let's go, man. $18.53 billion versus $16.2 billion. That is one heck of a beat there. Holy crap. I'm confused on why this is going down after hours after that. It's probably guidance. Let's see here. Paid subscribers for Disney Plus, 118 million, which is amazing. I mean, that was just, they just started that a couple years ago, not even a couple years ago. So that's grown a lot. I want to see the parks revenue. Where is that? Parks, experiences, and products revenue of $5.45 billion, which is what percentage of their overall revenue for the quarter? What did they just do? I just read it, but I'm forgetting now. Where is it? $18 billion. So they did $5 billion park revenue. They did $18 billion total. So that's about what? 25%, 20, not even 20. If my math's right around there. So that's pretty interesting. Okay, that's pretty good actually. $5.5 billion parks revenue and products and experiences versus the $2.7 billion last year. So they're getting back in the groove, which is awesome and expected, by the way. And let's see here. What else do we have? Paid subscribers for this year, which I already mentioned, 118 million. That is compared to the 73 million last year, which is fantastic growth there. And let's see here for their guidance. They reaffirmed their Disney Plus sub guidance for 230 to 260 million paid subs by full year 24. So that's in 2-3 years from now. Not too bad. I'm not really sure why this is going lower. Oh, what did Bob Chapek say here? Touting historical investments in technology, just reference connecting consumers via our own Disney metaverse. I already knew that was going to happen. That's going to be interesting. Could you imagine popping the goggles on in 5-10 years, or maybe even sooner? Who the heck knows? And being in a room with your favorite Disney characters. I mean, and being in the movie. That's going to be unbelievable. You know, the next generation of kids, probably my kids, I mean, they're going to grow up with this stuff, and I'm not sure how I feel about that, to be honest. I mean, parenting is going to be interesting, man, in about 10 years for me. I mean, that's probably when I'm going to have to deal with it. It's going to be interesting times, let me tell you that. And the stock at this point just took out the lows from couple weeks ago, and recently it's actually trading at a multi-month low now. And at this point in time, guys, I might consider buying more Disney. I mean, if it goes under 160, 150, I'm probably going to add more to my position because, again, I'm already long in the stock. And I'm already long Tattooed Chef as well. Not a crazy position because this is way more speculative than Disney. I mean, way more speculative. Not even the same category. And I'm long Tattooed Chef regardless. And I've been selling covered calls against it for weeks at this point. I mean, I've done many trades selling covered calls on it, collecting premium, while it pretty much just does nothing, really. Well, now it's selling off a bit after hours. It's down about $1. So let's see what they did. They ended up doing, where is it here? Come on, Tattooed Chef. Are they not showing it here? God dang it. Live news sometimes does not show the earnings. Let me see if I could pop it up here. I don't want to waste your guys' time though. So if we're not seeing it here on live news, I might have to go to the next stock. Hold up. TTCF earnings. I'm typing it on Google here. I don't want to waste your guys' time though. But overall, look, this stock, while this pops up, maybe we see it. Probably not. Oh, I spelt that wrong here on Google. Hold up. TTCF. We're noticing this is clearly in a wedge. I mean, if we're looking at this stock right now, if I pull up the 3-year chart and zoom in a bit, I mean, this is a textbook wedge on TTCF. It's been in this pattern for about over a year, since September of 2020. You know, it's been making lower highs, but higher lows at the same time, and now we're more towards the bottom of the wedge. So I want to see if we end up breaking out of there on the upside, obviously, which I'm not sure when the heck that's going to happen. I feel like watching this stock has been like watching paint dry, and you guys have heard that reference before with a couple of different stocks, and this is one of them. So yeah, I mean, we'll take a look at the earnings probably tomorrow. I mean, I don't want to waste your guys' time. But overall, the stock's down, so that means, hey, maybe the earnings were not that good. So let's go to the next one here. Let's go to the next one. Affirm, AFRM. Let me pop that up. This one's ripping. It closed at 133. It went down 15% on the day. Now it's at 170 again, and it's going even higher, which is insane. So talk about volatility. I mean, this is ridiculous. If I pull up the 5-day, you can see it. We went down today, and we went down the past couple of days. Now we've recovered all those losses pretty much. So they did about, what is it here? Let me see. They did $1.13 in the red EPS, so they lost money. That doesn't compare to the negative 30 cents estimate, so they missed that by a long shot. And sales came in at $269.4 million versus the $248.23 million. So double, or rather, they missed EPS, they beat revenue, and they see, oh my gosh, that's why it's moving up. They see Q2 sales of $320 to $330 million versus the $296 million estimate, so that's a lot higher than the estimate. And they see full year 22 sales of 1.22 to about 1.25 billion versus the 1.2 billion estimate. So very nice quarter for Affirm. Guidance is great, which is incredible for it's one of the biggest biggest metrics to look out for in earnings season. I always say this, guys, watch out for guidance. So at this point, I want to see if Affirm, does this report take it to new all-time highs, or to at least break the high from about a couple of days ago. I think that's possible. So we're going to be watching it, and I'm not giving up on these Tattooed Chef earnings, guys. I'm pulling it up on my Twitter now. I got to give this out. There's no way. I got to give out these earnings here. But while I'm doing this, I'll simultaneously talk about Open Door, which is also ripping. This closed at $19. And it went down 7%, and now it's trading at $23 after hours. I mean, this is a big move, guys, from 19 at close roughly to 24. We pulled back a bit. Now we're just around $23. And let's see what they ended up doing. They did EPS of -9 cents. Let me get some coffee here, guys. -9 cents versus -17 cents estimated, and sales came in at 2.27 bill versus 2.01 bill. So double beat for Open Door. I'm not seeing anything on guidance here. And at this point in time, if I pull up the 4-hour chart, this stock, I mean, it's been reversing. We got hit from 33 to 13. Now we've been reversing out of the moving averages. We've been riding the moving averages. And now that we reported pretty good earnings and the stock's moving up back towards the mid-20s, I think there's a good chance this actually takes out the $25 high, which was the biggest resistance for the stock pretty much since the middle of October up until right now. So let's see if we break out. I'm actually going to set my alert at $25 per share. From that point, we might see the next leg up. So let me do that now. Mark is at or above $25 per share. And yeah, we're going to be watching that. Ticker symbol OPEN. And I'm still not seeing anything, even on Twitter here, for Tattooed Chef earnings. I mean, it's not really the biggest covered stock. You know, there's not too much coverage on it. So we're not going to see crazy activity on Twitter about it. Screw it, guys. We'll see what happens. I mean, it's not a big deal. Let's see here. Nothing. All right, forget it. We'll just look at it another time. Let's go to the next stock here, which didn't report earnings today. It's Mastercard, ticker symbol MA, and they actually had a pretty good day despite the overall markets, like we talked about in the beginning of the video. The overall markets got squashed today. Mastercard went up 4%, up $13, and you guys in my Patreon know I've been buying Mastercard. This is one of my long-term positions. I've owned it for about 2 years or something like that, and I've been buying the dip. You know, this hit $400 back in April, and ever since it started getting under $350, that's where I've been starting to add more to my position. And at this point in time, we're still down about 11% from the all-time high, and we got down to about $320, which was about a 20% drop. And I was adding in the $330 range. I think I got some at $320 as well. And at this point, we're trading above both moving averages. We're about to test the top of the downwards channel, which if we end up breaking out of there, guys, into 360, 370 plus, this could be off to the races. So keep your eyes out on Mastercard. And the last one today is Context Logic. This is a very speculative stock. It's gotten hit, but they reported earnings, and I want to cover it. We went from $21 back in February all the way to $4. I mean, you can't make this up, guys. This is why you got to be careful with the speculative investments, because if you're all in on these, which I know some of you guys are because I run the YouTube channel, I've been doing this for like 4 years, I get a lot of comments. A lot of people are all in on speculative stocks, cryptos as well. And this is a reason why you got to be careful, because this is down 80%, which is unreal. It's down 80%, and it's still down 80%. It really hasn't made much of a move, and I want to see if it does start cracking $6-7, because that is where I think it could start reversing, at least technically speaking. So before we look at the earnings, let me set my alert at 650 for this one. We're going to watch what it does at 650, and let's pop the live news tab up. So they did -10 cents EPS versus -15 cents. So they beat EPS, and sales also beat. 368 million versus 353.62 million estimate. Wait a second. Oh, their CEO stepping down. I'm not even going to attempt to I'm not even going to attempt to pronounce that name. I'm going to butcher it, but it looks like their CEO stepping down, sales miss, disappointing holiday forecast. So this probably might be a stock to maybe stay away from. But if you're a bit more of a speculative trader, or maybe a gambler, I might even have to put you in the gambler category. You could take a flyer on this. Maybe it starts ripping back towards 10. Maybe you make a double up there. But for it to go back to 20, that's a bit of a long shot in my opinion. Not saying it can't happen, and now looking at this 3-year chart, it was at $32. So if for it to go back there, we're talking to 6x. Is that going to happen? I doubt it. Is it in the cards? There's always a possibility. But would I bet on that? No. But if you want to speculate a bit, hey, context logic, Wish, ticker symbol WISH, it might be for you guys. So that's pretty much it for today. Those are the stocks I'm watching. I'm sorry. I wish I could have covered Tattooed Chef earnings, but they weren't on the live news tab. Blame ThinkOrSwim. It's their fault. So I'll catch you guys later on. If you enjoyed the video, hit the like button, subscribe, drop me a comment, and check out my Patreon. If you guys want my buy, sells, call outs, morning update videos, plus more, all of that's on Patreon. Link down below. Or you guys can go to stocksurfest.com/Patreon. Make sure to also get your $50 from M1 Finance or 2 stocks from Webull. Those are free. Also linked down below. And that's it. I'll catch you guys in the next video, which I made 2 videos earlier, one going over the CPI data, the other going over some short squeeze potential stocks. Check those videos out. Go on my channel, check them out. I'll see you there. Thanks for watching. Again, as always, keep crushing the markets. Stay safe out there. Peace out, guys.